Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news economic and investment anxiety is growing. Firstly, the S&P 500 is down a very sharp 2.6% so far on Wall Street this morning, and falling as equity markets fear the trade situation is getting out of control. Overnight, European markets dropped about 1.3%, while yesterday Shanghai was down 1.2% and Tokyo was down 0.7%. Overall, this correction has wiped out $1 trillion from global equity values in just one day. Driving the mood swing is the US-China trade situation. The Chinese came up with their retaliation list and is much smaller than the American salvo, but targets goods that will hurt US exporters, primarily because Chinese have fairly easy alternatives. All up, that will involve goods to the value of about $60 billion in annual trade. One option the Chinese have that the Americans don't is that they can let their currency depreciate, and they are. Since mid-April, they've let the yuan depreciate by 1.2%. One of the core reasons equity markets are lower is that no one seems to understand just where the dispute stands now. Tariffs are going on, but talks are continuing. And one group as confused as any are US Fed officials. On one hand, they say they have their settings about right. On the other, they see risks from the trade situation. Markets have priced in a full rate cut, however. In China, car sales are still in a severe contraction, with April sales down 17% year on year. Meanwhile, the EU is preparing for a round of US tariffs, especially on cars. That too will involve retaliation. In Australia, just how much their lending markets have changed was revealed in official data released yesterday about lending commitments. Total lending to households fell more than 17% in March 2019 from March 2018. For the full year to March, it was down more than 9%. That's a drop of more than $40 billion, and even big banks will have noticed that. It is a huge fall and has increased the odds of an RBA rate cut. US Treasury 10-year yield is now at 2.40%, and that's a 7 basis points drop in a day. Gold is up $13, now at $1,299 an ounce. And US oil prices are a little lower today, just on $61 a barrel, while the Brent benchmark is at $70 a barrel. That is despite a flare-up in the Persian Gulf, where tensions are rising and some oil tankers have been attacked. The Kiwi dollar has weakened overnight in the risk-off mood and is now at 65.7 US cents. On the cross rates against the Aussie, they have weakened more than us, and so we're up to 94.6 Aussie cents. Against the euro, we're lower at 58.5 euro cents. That makes the TWI marginally softer at 70.4. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.